All right, and I think we are underway. Guys, I'm super stoked for this. I'm excited to talk about staking, kind of diving into the mechanics and the potential use cases. I think just for context, it's always really good for people who might not know you. Just a round of intros from left to right. David, we can start with you, go to Rich, and then go to Brian. Intros on yourself and the projects that you're working on.
Yeah, so David Shea, co-founder of Babylon. So in Babylon, we focus on building trustless Bitcoin staking. We've been working on this for about 2 years. Been in the blockchain space for about 6 years as a researcher.
Hi there, Rich from Core now. Core is an L1 blockchain powered by Bitcoin. We've got 55% of the Bitcoin hash, about 300 million in Bitcoin staked, earning roughly 5%. It's got essentially Bitcoin Lido on one side, and then the other side is a full BTC-Fi ecosystem with tens of thousands of weekly active users and about 200 million in TVL.
Hey everyone, my name is Brian Mahoney. I'm here wearing a few hats today, representing Thesis, which is a Bitcoin venture studio. I lead all the business development and go-to-market efforts for Thesis. And we have a couple of different Bitcoin projects here I'll be talking about today in the context of staking. One of them is Acre, which is effectively a Lido for Bitcoin, a one-click staking experience. And we also have a Bitcoin L2 called Mezzo, which we just launched earlier this year.
Awesome. Well, I always think it's helpful to set context, define kind of what we mean by Bitcoin staking. What are we doing this for? What is the purpose of using the Bitcoin asset to secure other chains and applications? David, we can start with you on that.
Yeah, so staking, the word staking comes from proof of stake chains. So in proof of stake chains, stakers provide collateral to ensure the security of the chain. Now, the collateral of a proof of stake chain has historically been from its native asset. Like Ethereum is secured by ETH, Avalanche is secured by Ava, Solana is secured by Sol, etc. Our idea is that actually all we need is capital to provide security. And the capital does not have to be exclusively or at all the native asset. So in that context, what is the best asset to provide security? We believe is Bitcoin. One, because of the size of the asset, over 1 trillion. The bigger the asset, the more the security. Two, the stability of the asset compared to many other tokens. So our protocol enables any Bitcoin holder to trustlessly provide Bitcoin as a collateral to provide security to any proof of stake chains.
Rich, anything to add to that?
So I think we agree on a lot of things there. And Bitcoin is the hardest money. It's the best collateral asset that's possible. And it's important to think about this economic security like David mentioned. And it's important to also think about when it comes to Bitcoin staking that it needs to be trustless. So when we're adding economic security to these chains, Bitcoiners shouldn't have to give up custody or take on additional risk in order to provide this security. It needs to be this additional subsidy, and they should be getting paid for the additional work that they're doing by securing these chains.
Yeah, I think Rich and David covered it quite well, but maybe I'll kind of approach it from the financial and market side. So one aspect is using sound money, which is Bitcoin, obviously the largest market, to secure other proof of stake chains, which is what Core and Babylon are very focused on. We're thinking about it also from that perspective, of course, but more on the user experience side in particular, unlocking kind of the next wave of the Bitcoin economy and using and building real-world use cases for your Bitcoin and providing economic reward for putting your Bitcoin to work. So when you come to a proof of stake chain, you bridge your Bitcoin over, bring your Bitcoin to that chain, and you get rewarded in native Bitcoin ideally, and then also can earn those tokens or assets from those ecosystems. So one of the ways that we're really thinking about it is how do we unlock this economic layer and sort of the next wave of economic activity for Bitcoin.
So in proof of stake, my understanding is that the security that your network is based on the amount of stake that's put up, and that's the cost relative to the stake is how you attack the network. So the more money you have staked, the more secure your network is. Pretty much like we're all in agreement with that statement. Okay. So from a perspective of like applications and the use cases that you guys are thinking about, are we just going to be like seeing these staking protocols being used to secure like different types of side chains? Are we looking at like things like prover coordination protocols for ZK rollup, sequencer decentralization? What do you guys think is like the killer application use case for staking, or is it something beyond that? Is it liquid staking or something more user focused? Like, what do you guys think is the next wave of use cases that are going to be unlocked by using the collateral asset to secure these networks?
Maybe I'll jump in on that one. So one of the core use cases that we're thinking about is, unlocking sort of the, I don't want to call it because nothing's quite risk-free, but the risk-free rate for Bitcoin and using, Bitcoin staking as that, right? I think in a post-FTX world, right, it's proven in the past cycles that people do want to earn Bitcoin on Bitcoin or stack sats, right? But for us, what we've seen is a massive void in the market since, a lot of these centralized exchanges and lending markets like BlockFi, et cetera, went down. The credit risk and black box model is not the way to unlock, yield or Bitcoin on Bitcoin earning, right? So for us, the way we're really approaching this is how do you have a fully on-chain experience that is as close to Bitcoin value set as possible, open source, permissionless, and community-led. And we think, Bitcoin staking is kind of the rails for that, what we're establishing here. And then, how do you tap into the mainstream user base to unlock native yield in Bitcoin? And that to us is kind of the North Star and ultimately the killer app for at least sort of this current wave of activity in Bitcoin.
So I'd just like to add on to what Brian said. So Core actually has introduced the risk-free rate for Bitcoin. So when you lock up your Bitcoin on the Bitcoin L1, there is no slashing risk with Core. It's actually paid entirely in the Core native token, and it's paid out on an 81-year, very slow burn emission curve. And the idea here is to be this exogenous block reward for Bitcoin, because we do need to solve the security budget issue for Bitcoin, and by helping to incentivize Bitcoin holders and Bitcoin miners, as the Core system does, that will keep Bitcoin secure and decentralized, which is of the interest of everyone in this room. And I think we need to get staking right before we start to move into some of these more complex use cases. Because once staking is unlocked, and again, Core is the first mover here, but there's many others that will launch later this year, with this unlocked, we can get into more, maybe even more interesting or novel use cases on top of it, like restaking or other app chains, things like that on top of Bitcoin.
Yeah, I think our view is the following: that any new application needs security. So in some sense, staking is kind of in my mind, a use case agnostic, a foundation technology. And what we are enabling is essentially any new chain that wants to launch have access to this huge amount of capital, which is Bitcoin. So I feel that is a very important step in enabling new developers to focus on building new application instead of worrying about the security underneath.
So it's more like, to build on that, it's more like a go-to-market thing, right? You don't want to have to like bootstrap your own proof-of-stake consensus network because that takes a lot of resources and it takes a lot of capital. So what you're kind of arguing is that if we can leverage another asset and potentially incentivize these validators to operate these networks, it's an easier way to get to market for some of these applications.
Yeah, and this is the Bitcoin conference, so we should not forget about the other side, which are the Bitcoin holders. So very importantly, we should think about Bitcoin staking as like a two-sided marketplace. On the one side are the Bitcoin holders supplying the capital. On the other side are proof-of-stake chains that are absorbing this capital to get security.
So what are some of the risks that you guys are currently, this is a very early design space, and I think that proof of stake comes with its trade-offs like every other design system. What are some of the risks that you guys are currently thinking through and potentially trying to mitigate when you're trying to build these systems and make them more accessible to different people?
So I think it's important, like the kind of classic maxim in crypto is if you don't know where the yield is coming from, you are the yield. And I think everyone, particularly in the Bitcoin space, should feel very, very close to that after Genesis, BlockFi, all the different groups that Brian mentioned. And this is actually why Core built its system as a native time lock on Bitcoin. And it was important that you never gave up custody, you never sent it to a multi-sig, and there was no slashing risk, because this needed to be able to be composable with both like the staunchest Bitcoin security advocates as well as with TradFi. And this is actually how Core is now powering several of the yield-bearing ETPs throughout Europe and plans to take it later this year. But how we view kind of this system playing out is core is really like kind of this Bitcoin bond layer that provides this, risk-free yield, and we expect more and more of these risks to get built on top of it. And then that risk should be priced in, whether it's restaking, whether it's some sort of like tranched lending protocol, like you name it, it should all be built on top of it. But as a Bitcoiner, you should be able to decide at what level of that spectrum you want to partake in. And how we see it is there's many Bitcoiners that will do nothing today, and that's okay. There's a large group that wants to maybe earn some yield, and we have to dispel the bad parts about yield, but they'll probably stop at Bitcoin staking. And then there's another group that is ready to start to bridge over and participate in Bitcoin DeFi, and it's our job to provide applications, things like that, for them to get higher yields, to have more opportunities to participate in this new Bitcoin economy. But it's also okay that we're in this education spectrum. It's totally fine to allow people to stop wherever they're comfortable, and the mistake would be trying to bring people through that continuum too fast.
Yes. Yeah, so I think one thing very important to highlight about staking is, as you mentioned, the trustless nature, right? So in Ethereum, everybody can stake, and that's kind of the low risk or almost risk-free way of earning yield. Now in Ethereum, when you stake, you don't give your ETH to Vitalik and ask Vitalik to take care of it to provide security to the proof-of-stake Ethereum chain. So similarly, I think the golden standard of Bitcoin staking should be the same, which is no custodial, completely trustless, only secure through cryptography. And that's the protocol that we built.
I mean, I'll echo what David was just saying, but the way we've been thinking about it is, and sort of if you look at the evolution of the various market styles, there's always been sort of this trade-off between user experience, centralization versus decentralization and security models, right? And I think we're at a moment in time here where the mainstream public has woken up in the sense of they're aware of the risks of centralization. The average user understands, okay, there is this black box model that doesn't work, right? So you're seeing, and this is honestly I've been in this space since 2016, full time, and this is the first cycle where I'm not seeing, a centralized, like a BlockFi type player getting funded. And I think that's a new leaf has been turned in this industry. And there's also this, full boomerang back to Bitcoin from a developer and talent perspective, which is a major unlock, I think. And, personally has me super bullish, especially being here at this event and kind of what I'm seeing on the builder side. We're at a major unlock here, but we still got to make sure that we stay as close to possible from a transparency and ethos perspective to the Bitcoin community and not lose sight of that. And so what we've been doing at Thesis is, we've been on a 10-year journey for this, building sort of, we call it the Bitcoin stack, but first building sort of the rails, where we have a product called TBTC that is a fully decentralized and trustless bridge, and that uses and allows Bitcoin to effectively be turned into a proof-of-stake asset. And now we're building a user experience layer on top through products like Acre and Mezzo.
So with that, but I think some of the pushback, right? And please correct me if I'm mistaken, kind of on my thoughts here. Some of the pushback I've heard in maybe Ethereum or Tendermint, Comet BFT Tendermint, proof of stake networks, is that maybe in Ethereum users just prefer to buy liquid staking tokens and basically kind of pseudo delegate that staking power to a specific entity, and then in delegated proof of stake, it's only a federated network of validators that are that are actually staking, and you're just delegating your tokens to these validators to stake on your behalf. Obviously, you can vote and you can move your tokens to different validators, and you have the freedom to do that. But what is kind of the response with maybe these future centralization vectors that we've seen play out in other ecosystems, and how do we avoid that when designing these systems in Bitcoin? Is it just making sure that the barrier to entry to staking is low enough, or are there additional considerations that we can implement to kind of maybe avoid some of those circumstances?
I mean, I think a lot of the infrastructure exists from a security and tech perspective, right, today. And one of the things that's been missing, at least from my perspective, is that user experience layer and opening up an easy way for folks to, because it's like, if you hold shares in Apple, 90% of the public, right, they're not really participating as much in these shareholder votes and things. They just want to participate in the upside. They don't really care how it happens, or they're too busy to go deep down the rabbit hole. for the users that want to go deep down the rabbit hole and understand the flow of funds and look on chain and get into all the data, that's great. But if we're really going to get sort of this mainstream adoption that we're all here and make Bitcoin the #1 asset in the world, right? We need to have a super simple user experience layer that brings in more flow and reduces that friction as much as possible. And that's really been sort of what we've been focused on, is unlocking that. And I think on the other side, we can tap into already the infrastructure that's been built, and you see this, across these various ecosystems. And now it's kind of coming all back to Bitcoin, right? So I think it's a pretty interesting inflection point in Bitcoin's time for this.
And I think some of it is, taking the TBTC approach, which is not taking the easy answer. Like, a lot of these easy answers will be to re-centralize, and we have to be careful and make sure these things remain decentralized as we start to compose these things more and more. And I think if we think about like LSTs, which I think will likely form like an SDE sort of thing in Bitcoin, where you can have Bitcoin, or you can have Bitcoin plus yield. And I think in Bitcoin DeFi, LSTs will be these dominant assets. And there's a lot of amazing people that are working on it, like Acre over here. And we just have to be careful when we build these systems that we don't start to build in new risks into it, or at least not accurately price those risks.
Yeah, so just briefly address the decentralization issue. So one issue with proof-of-stake chains, especially small ones, is that actually there's a lot of centralization because a lot of the tokens are actually owned by insiders. And I think having Bitcoin as a very decentralized asset to provide security, and Bitcoin is owned by many, many people. So that gives an opportunity, actually, for a new network to provide a decentralization path. So I think that's a very important aspect of Bitcoin staking that I want to highlight.
Awesome, and appreciate that. And I think then, I guess kind of maybe, we know we have a few minutes left here. I want to get this question in. A lot of, proof of stake networks have been, for lack of a better term, flooded by, some of the communities that are, aligned with Bitcoin. What's the response to, there might be some pushback of why would we want to introduce proof of stake networks to help scale Bitcoin? What's the response to that FUD? And I understand the stake chains paper kind of highlighted, proof of work at the base layer is what we look for, but then when we use proof of stake, it's very sufficient for second layers. I'm just trying to understand what's the response to people who might be very skeptical of introducing this type of system into Bitcoin as a securing second layer in Bitcoin aligned protocols.
So I'm happy to start off on that one. So I think the first piece is that it goes with proof of stake is people are inherently skeptical of Bitcoin yield, right? And they think that many of these things are just another token. It's not actually trying to be symbiotic or aligned with Bitcoin. And I think what we really do have, probably not one happening from now, but probably two happenings from now, we have some sort of potential crisis in the Bitcoin security budget. And I know that there's a lot of debate over whether or not transaction fees will be able to actually keep Bitcoin secure and decentralized over time. And I don't expect miners or mining pools to start acting against their economic interest. So we need to find ways to avoid either moving Bitcoin to proof of stake, adding tail emission, or doing something that actually really damages Bitcoin, the base layer itself, which I don't find is an acceptable solution as a Bitcoin holder. And this is why it's important for these various protocols to actually be symbiotic with Bitcoin and actually be these proof-of-stake layers built on top of Bitcoin, because ultimately they should give back not just to the Bitcoin miners and the mining pools, but also to Bitcoin holders. So I think it's a little bit of kind of an education problem from the Bitcoin community, but a massive unlock for us all here on the panel and throughout the conference to get right.
Yeah, so I've done a lot of years of research on proof of work versus proof of stake security. And of course, proof of work is backing Bitcoin. But we don't need that many networks built on proof of work. Proof of stake has a lot of advantages. There's already a very mature, Comic BFT stack to build a new chain. So in some sense, we are basically using the proof of work security backing Bitcoin, using its asset to enable a developer to launch a new chain very easily using stack. And proof of stake has a lot of advantages like very fast confirmation, and that proof of work chain is hard to achieve.
Yeah, there's two things that I sort of think about when we don't call them the maxis. We don't believe in that term. We call them the Bitcoin Stoics. And when they're coming against us from giving a little FUD in terms of Bitcoin staking, I mean, there's two sort of ways we think about it. As one, miners are ultimately responsible for the Bitcoin network, right? And as these happenings continue to happen over the next 10 plus years, right, we are looking at diminishing fee streams or more competition for miners, right? So what staking unlocks is new revenue streams for miners. And let's not forget, many miners are publicly traded companies, right? They have to report to shareholders. You know, I was just at an event earlier this year where they're reporting on their earnings, and they're actually expanding and looking into data centers and powering AI compute because they need to, you know, they have lumpy revenue streams, and they need to make that, you know, much cleaner for going forward for prediction, right? So a little controversial take, but I would say that staking is actually a new revenue stream. It could be validators, and we're seeing this firsthand with mining pools right now in the industry. They're growing into and supporting non-Bitcoin networks. And then the second thing is, you know, staking, Bitcoin being locked up in staking networks is good for Bitcoin. It takes floating supply out of the system. And what that does is pumps all our bags, right, ultimately. So I think it's a great thing, and I don't know why there's a lot of fun on this proof of stake thing for Bitcoin, right? It doesn't really make sense to me. So I would love to hear a contrarian take on it, but that's my view.
So I think something you just mentioned, like, you know, the trade-offs from like a protocol perspective, right? So if you're building out these like second layers, you can design them in a way like better user experience, right? Faster block confirmations. These are like very interesting things because not only is it a financial perspective, but it's also like providing, you know, better like on-chain use cases in the development of applications. So I just wanted to echo that point as well, and also agree with the other points made there. I think that, you know, wrapping up here, we got a couple more minutes. What are some open research areas or things that you guys are very like excited about, you know, related to staking and related to this design space coming up over, you know, whether it's, you know, protocols coming to market or just, you know, future improvements that your teams think that can be made to these protocols? What are some exciting areas you guys are all spending your time on?
Yeah, so research is a very important part of our Babylon project, and we're constantly doing research to extend the capability. And you know, the thing is that Bitcoin, right, doesn't have a smart contract. So to be able to build trustless protocol on Bitcoin is the challenge. And what we have achieved is basically Bitcoin staking to maintain consensus, which is sort of the core security of a chain. But you want to do more. For example, you want to do application level slashing so that you can secure more interesting applications. And to be able to do that natively on Bitcoin trustlessly is a challenge. However, there are some new developments that enable that to potentially happen within, say, 12 months. One is OPCat. OPCat is another one possibility. The other is BitVM. So we are actively working on those two directions.
So just like to echo David on OPCat and BitVM, I think if we can solve particularly trustless bridging, that would be a huge unlock and help us get more people along that curve from maybe stopping at Bitcoin staking to participating in these ecosystems. I think from like more of a protocol layer itself, like in core, we also really care about local fee markets, because that's another problem of we can now get Bitcoin in some way to these L2s, but how do you use it fast, cheaply, and predictably? And if we actually want to get to Bitcoin as money, which is maybe a controversial take at this point, we actually have to be able to scale it on these L2s and be able to do it in a way that is cost competitive for everyone in the world.
Yeah, I count, the latest count is like 100 plus Bitcoin L2s and sidechains coming to market in the next 6 months. It's about to get extremely interesting in the sort of the next, we'll call it the Bitcoin Renaissance, the next evolution of Bitcoin here. And so one of the areas I'm watching closely is how many of these Bitcoin L2s will actually be able to natively unlock Bitcoin bridging directly. And that's an area we're paying super close attention to, and I'm very excited to see this innovation as it continues to unfold. And of course, introducing other things like BitVM and what's happening there, that's also quite exciting.
Awesome. Well, I want to thank you guys for your time. Everyone who listened to this, I would highly recommend checking out Core, Babylon, and Thesis and Mezzo for different use cases that are being unlocked with regards to like Bitcoin staking. So yeah, thank you guys so much for your time, and yeah, thanks everyone for listening. That's it.
Thanks for having us.